Okay, um, I want to do some back testing on this VIX 25 quickly to just get something clear. So just mind this trade here. If we went to the daily time frame, you can remember that yesterday, and I was on this live stream, I wanted this high here to get traded to and cleared. You can see that the market did do that. We did make a new high, and once I saw that it cleared, then I was I wanted obviously then this fair value gap to be filled in the form of a busy, so this daily fair value gap as well as this level. Um, you can see that we've had, remember, since trading into this weekly busy, which was down here, there were just 1, 2, 3, 4, 5, 6, 7, 8, 3, about 6 consecutive just, bullish days. So yeah, anyways, so the market clears the highs of, so that's the 26th of March. So after the previous day has now run this high, although I do think that these are too smooth and they'll be revisited at a later point, maybe after we've traded back down into this daily imbalance here. The next um, time frame that I would then drop to is the 8 hour. So this time, for once, for in case I ever watch this back, this is in the time zone, just UTC +2, so it's my local time. Simply because although I will definitely use the IC2 kill zones with this trade focuses. I mean, VIX is that it opens at 2 a.m. So every 8 hour candle, you can see it's at 6 o'clock the previous day, 2 a.m. in the morning, then 10 o'clock, then just the cycle repeats. So yesterday I am combating with the market is just it's just failing to just clear this high here. I will, so you can see how it was, the high just did not want to get taken out. I mean it was just teasing. You can see over here how it teased, literally went just shy of it and then pulled back, and then eventually at 6 o'clock with the next 8 hour candle. So after we trade to this high, we're looking for, like I said, this daily imbalance, which has this 8 hour short-term low here. So we can even just mark that low, and we'll put it in red. So 2 a.m. So I've now also, kind of realized that if I want to be trading synthetic indices, and we can go back since we're all on the 2 hour now. Yes, 10 o'clock, but look at how the from 10 to 6 is not always the most amount of action on it, right? But if you see the 2 a.m. candle here, we go back 3 2 a.m., 3 2 a.m. Like here, this, so once this, at least if you, okay, here's the logic. You don't have to, it's not going to be every day that there's a good setup that prints. But for example, on a day like this, so okay, cool. So when you came in at 2 a.m., you start trading. What do you see the market attacking? You see the market attacking the sell side down here. But you can see that this candle to that candle is an entire 8 hours. So then you say to yourself, maybe you don't want to be caught in the middle, but possibly the 15th of March, you could have taken shorts here at 2 a.m. and gone down into the sell side because it's a short-term low. And if you look at, there's also another gap below it that's unfolding. This one, the market had not even traded to the consequent encroachment of it previously. It was merely at a quarter level. So, anyways, back to today, why I should have been, and I think this is now my new rule of Trade, so wake up obviously 2 o'clock. If it's a 3 hour session, it's gonna last till about 5. If there's nothing by 4 o'clock, then you know I just I just call it a day and leave it alone. But so like today, when fuck me, when 2 o'clock opens here and it's now 2 a.m., it's a new day, it's a new daily chart. The previous 8 hour candle created this. This can be an 8 hour um, bearish slash bearish BPR. So that's what we get here. And so when 4 o'clock, so let's go to the 4 hour chart. We also see that there's a bearish BPR here, because you see how this candle passed through this gap in one move, and there's also this inversion here. But again, we'll stick to the higher time frame, 8 hour, and you can see that on top here, price does visit this rather small SEBI here. So if we then drop down back into the 1 hour time frame, and we see, so like we said, so from 2 o'clock to 4 o'clock, if there's nothing, there's nothing. So 2 o'clock opens, and pulls back higher. So now all we're basically waiting for is that, number one, you just don't want to close above this box here, because this is an 8 hour inversion slash bearish BPR. So you want that low, you want the high of that to keep prices lower. And you can see that the market does in fact reject the top end of it. But that's already 2 hours of just bullishness. One would be looking for shorts. Now, here's the thing. This is the daily sell side. This is the initial target. Yes, this gap will likely get traded to, but this is, I think, a much lower hanging fruit objective. So it's that if I'm targeting a daily unfilled fair value gap after the 8 hour has made a bearish BPR slash bearish inversion fair value gap, I can't get onto the 1 minute and every single time the market offers a cheap short here, and then I get in. So what I mean is, I'll go from the 1 hour to the hourly just to put some emphasis and hopefully get this through my thick skull of it's simply just, it is not a good way to trade, and it will lead to a lot of hardship. So let's see what happens. So 2 o'clock, we have coming into the market, we've got a bearish bias, right? And so I want to get short because the 8 hour just made this whole rectangle here is an 8 hour bearish BPR. So what I'm going to now be doing is, because of, I think they call it commitment bias or something, every bullish opportunity which presents itself, I'm going to think, is the market attempting to fade me, and I'm going to want to get short. So let's see here. So the market trades back down, trades into this gap. We don't close past the low, we simply just open below it, trade above it again. So then we support this pussy, then see how there's these two highest up close candles, right? We at some point close past the low here, trade back up into it, and then there's this minor sell off. And see again, now if I'm on the 1 minute and I'm so zoomed in, right, I'm now seeing this SEBI here as well. So I'm thinking, cool, like all I should be getting here is just short. So I go short here, or maybe I try a short here first at 214, and I get a little bit, I get like 0.6 R, market just explodes higher and it stops me out. Then, for example, if I try to short this SIPI here, I would have also been stopped. Then the market, I'm unsure if these are exact highs or let's see. No, so this is a higher high. But so this would be the breaker. But mind you, like we said, if there's a massive wick, you need to use the wick. And you see how again, so the market gets this. You see this massive close, might see this bearish BPR here, and now I start thinking to myself, cool. Mind you, my bias is down here. Sorry, my bias is short. My target is down here, and I'm going to force this short. So then I choose to get short here, and very quickly I realize that I'm wrong. Trade doesn't go my way. So already just within the span of, let's say, 18 minutes or so, 17, call it, let's just call it 20 minutes. Within a span of 20 minutes, I have found a reason to take 3 losses. So what does the market do? Market just pulls higher. So what is it doing currently? If we look at this pre 2 a.m., we see that we had this massive SIBI here that was made. So I can remove the rest of the stuff. And once we got a strong close outside of it, traded back down into these down close candles, which is model 24, but this would be a day of I need to sit on my hands. So you see how the market pulls higher, and all of these smooth highs here, if we just zoom out, all this by anyone who had been selling off here, their stops all get run. So now what do I think now? So now it's 3 a.m. Again, think of it. I'm trading this early in the morning. It's likely that I didn't sleep well. I just want my trade so I can make money and then fuck off, right? So what do I do again? I see, okay, it's 250. Where we're now in a macro. I see this inversion here. Sorry, this Bessie. We close past it. I see a large top wick. I say, okay, cool, maybe I don't enter. Right, sales are not happening currently. And then I see the small fair value gap here as well. I maybe try and short there again. Market runs up higher, creates a bullish change in the state of delivery with this down close candle, and it just accelerates up. So now during all of this, I'm getting frustrated now. Then we see high, high, high. Okay, we get that close and move down. So I'm now maybe considering, okay, could this maybe be a breaker trade here? Nope. In fact, the reason why this bearish breaker sell becomes invalid is because this whole price action here with, remember what a breaker is, bullish breaker would be that. Bullish breaker will be in this price leg, which can be seen over here, that low, high, that low, and then quick retracement, and then run higher. It's unneat, but yeah. So this becomes invalid because these two consecutive up close candles now become the bullish breaker. So now, mind you, I'm now probably getting extremely frustrated as well because I just saw we've now had this bearish BPR formed here. We've got this 1 minute inversion, and I don't understand why. Because think of it, right? Because my bias, because I'm so confident in my trades and all, and knowing that yes, but surely after clearing this previous day high, way over here, surely that this, at least this fair value gap here, this daily level needs to get traded to. So then again, it's possible, and I can see now with, I guess, with the benefit of hindsight, that if I'm targeting and like a daily level, why would I want the 1 minute to mark my change in the state of delivery? The only reason that I can think of as to why I would want to do that is if I'm trying to force a trade, if I'm trying to catch the top and the bottom of the market, because I want every trade to be the trade that's going to make me $100,000, that's going to make me a millionaire. But I can find many examples here of I could have been fake short here. This time close candle could have also faked me short 3 times in this price action. So already we can say between 2 and 3:30 in the morning today, if I was stuck on the 1 minute, I would have lost 5 trades, 5 whole trades. But then you say, oh, but you see how, but then if I say this, see how this busy here and this whole inversion sell-off works perfectly. I mean, so you get your inversion fair value gap, the most recent up candle was formed here, so prop block, so a perfect model 24. This break of structure, you see this move here, also model 22 here, stop loss above there, entry here, and that would have been me picking the top. No, because like I said, if I chose to ignore the 1 minute here and here and here, right, there was a reason. The reason is, let's quickly go to the 5 minute time frame, and let's see between 2 and 4 in the morning, how many losses was I going to take? And this is with now, so it's here are the rules that I've now given myself. So it's for London, I'm only allowed to use breakers for pound USD. I can only trade pound USD and I can only use breakers. If for some reason there's some USD news related or some USD related news later in the day, then so be it. Then I guess I can't trade. See, so school children. So, anyways, so shorts. So we'd say, cool, because you have a SIBI here, right? It, I guess, the wise thing to be doing. The same reason how whenever I have a bearish inversion fair value gap, I want a bearish propulsion block. When I have a bullish inversion fair value gap, I want a bullish propulsion block. For shorts here, I would need an up close candles open to get close past to constitute shorts on the 5 minute. What happens here? So we've got this up close candle, like okay. We don't we don't take out this previous hourly low, which is strange initially. Generating this perfect sell side down here. Look at these. We'll go there. Boom. That low, and this low. Hello? Yes? Okay. Alright. I'm just by the laptop. Hmm. Um, I don't know, but I'll just see. I mean, it's really just a slow day, so no, nothing. Why don't you just take a taxi? Okay. I just take taxis. It's cheaper, but all right. All right. Phone call. So you see how you have, I'll just read the last 8 numbers: 391 6320, 391 6470, 391 780. So it's this here is cell side being generated perfectly. But now, mind you, cell side, and this is why whenever I watch all of these guys on, like people who will do market replay and who like identify trade setups, they at times do it too, what's the word? They do it too quick. They act like the market is just it's gonna build up orders. Because let's say this right, okay? According to higher time frame market structure, this level, this red line here, at 2370.2140 is the level that I want price to trade to. Okay, we've run the previous day high, so the framework on the high time frame is already bearish. But I mean, how easy is it for? I mean, just think of everyone who's now got a trend line maybe drawn up over here. Let's do it like so, right? I mean, they've probably got quite a few stop losses above here. Others might have put theirs just above here. And mind you, these two white lines, this is actually a daily, sorry, no, this is a 4-hour SIBI, which has not been filled. So yes, although this run up higher is not what I want because I'm bearish, I need to understand when I'm sitting there in the markets, and I guess whoever watches this one day, if you're trying to learn anything from this, is that um, so the market wants to sell off, right? Where do you want to sell your clothes for cheap, or do you want to sell them for a premium? So what does it do here? So already when it generates these smooth lows, these extremely smooth lows, and just spools higher, that's the first indication of, okay, let the market run higher. But mind you, right, because everyone's got this whole downtrend, how many people do you think that uh, some people use this entire zone as resistance, right? How many people do you believe are looking at it going up into here and thinking, okay, let me short, stop losses above here, gets ran. Then they think, okay, wait, no, let's maybe do stop losses here, it gets run. Then they do stop losses above this high, it gets taken out over here. Now, what do you think? Now people are probably reckoning, okay, cool, like we are now probably in a very strong, we're gonna have a bullish day. Let's keep carrying, now they're thinking, well, then we might as well keep going higher. Now, this here needs to be noted. So wait, fuck. Let's do it like this. Okay, so let me remove this. Let me remove this trend line, and let me remove this. Mind you, I said that on the 1 minute there would have been 5 points in which I would have, or 5 times that I would have lost money. So what do we do? So it's, if the market is to remain bearish and my bias of short is right, this fair value gaps high should not get close past. What happens? We wick through it once here. The next candle starts trading lower. Then we wick through it again. It's not a very good sign. The following candle closes past the high, and it then creates this inversion fair value gap. So this becomes a bullish inversion fair value gap. Okay. So see how when it was closed past here, it was used as a SIBI again. Then return all the way up higher. I mean, if you just extend this fair value gap out, what a drop! What a fantastic drop! But anywho, We'll just stick to using it in this section of price action here. My goodness. You know, a few bucket list items that I'm going to buy when I have more money is a very nice laptop. So the day today is the 27th of March 2025. It's 28 minutes past 2 in the afternoon, GMT plus 2. The person speaking is Urinaka Shongwa. Urinaka Shongwa. Urinaka Shongwa. Can say it with so much conviction. So you get this inversion fair value gap gets made here. There is a propulsion block. We trade back down into this propulsion block and we explode higher. So once this forms here, this candle's close. I, at the very minimum, expect the most recent high. Before, see this should be here, so this inversion, the most recent high, I at least expect that high to get traded to. So mind you, I'm sitting here of, I want to be bearish, I want to be bearish. So from 2 o'clock, it's already now been 40 minutes of just really consolidation, nothing serious happens. And I'm not taking any longs because I know that I want to see lower prices. So what does the market keep doing? It keeps running up higher. By the time it reaches 1 hour, we're showing no signs of a bearish sell model being set up. And we keep going up and we keep going up. Eventually, at 3:45, we form our high. And this is, I wish I could be like Michael and say, put this in your notes because I certainly have. Because I've noticed it quite a few too many times that like I just get fucked over. After price sweeps a high or sweeps a low, if there's a strong formation of a propulsion block or an order block, bullish or bearish, depending if you're in a discount and you swept a low, you want a bullish order block. If you're in a premium and you swept a high, you want a bearish propulsion block. What do we get first? Prop block. That immediately happens. 355. We're like, cool. That is not enough for me to get short yet. Right? Another thing that I'm looking for is a mitigation block. Is when see this point here. So this candle. So it's you'll have say you've got down close candles, then up close, then down close again. That most recent down close candle is your mitigation block. So, but anyways, too much theory here that I'm going through. That takes place. We're still in this busy over here. So we need to close past this low for us to have the full model 24 print. So we get that close. But after we get this close, note what happens. So now we'd say, cool. This propulsion block here was formed by the same candle which formed the inversion fair value gap. But then we traded down into another busy. So we've got a fair value gap here and a fair value gap here. So to put my stop loss here, although the initial propulsion block formed after the sweep, the high that formed that is way up here. And if you look at it from a high to a low standpoint, so although it's not on this Fibonacci, you'll see that this stop loss is technically, if I were to have gone short, say okay, inversion, I'm not wasting any time, right there on that entry, I'm putting my stop loss above there, and finally I'm happy I got my day trade. This is going to be an absolute bullet of a trade. I'm going to leave it. I'll go break even after a while. I mean, yeah, it worked eventually, but what screws me over is stop loss placement. It's still within the dealing range. So you think of the first propulsion block formed after that, right? Think of this inversion you're trading. Yes, you're trading an inversion. It's 1, 2, 3. It's that high. Don't be stingy with the stop. So yes, at some point it seemed the market was just running towards my stop losses, and I'm going to lose the trade. But then so be it. So then what ends up taking place? Go out of here quickly. So you see how on the 5 minute now you're saying cool. I mean, but it's if we think of the mitigation block rules, there's too much lipstick on this, way too much. But you can say yes, but you see how you had that high and then this low and then that high, then this low. So this should have just traded back up and gone back down. You're like, no, I mean, it runs that high because it's fucking ideal. Takes you out. Again, it fakes you thinking that, oh no, I'm going to be going long. Why am I not accepting this as it's buying up higher yet? Because if you look at this up close candle here, we use its entire body. Look at where the bodies stay. The wicks are doing the damage. Furthermore, now to even avoid further losses, same model gonna go up one time frame, or not one, but gonna go up to the next available one to me. Well, there is also the 10 minute, but I'll stick to the 15. What do we have here? A sweep of a high, a bearish BPR, which is neat, and we're waiting for what? One more thing, a propulsion block to form. Sweep, and there we go. And there you get short. High of that inversion. This is the target. So I would have had to wait until then from 2 hours and 45 minutes of sitting on my hand and waiting. That is the time it would have taken me to find this trade. And for this trade to run for a 1 to 6 risk to reward with the 15 minute, it would have taken 7.5 hours. But 6 are, if I start risking $5 per trade, 6 are, that's $30. That could be $30, around 500 rand, all made, and the only time it took was basically 3 hours. So let's call it $600. So let's say, so my time with this model could be worth about $200 an hour. Because it's not the time it took for the trade to run. Look, this trade could have, you see how the first drop off was, what's that, 51, what? Was like was 22 points. And it did that in no time. It just hard clips within an hour. But then it takes to complete 14 points. That then takes 6 hours. But once this low then got traded to, because mind you, we're looking for this. So once this got traded to, this trade was risk-free. And I then say you move the stop loss to break even and you leave it alone. So what are the rules now for step index and all this stuff? I've got my London session rules now regarding Asian session and VIX 25. Wait 5 minute, 50-minute time frame. If there's not a clear trade, boo-hoo. But patience. I'll end the stream here.